What's up, YouTube? Welcome to my very first episode of the Sunday Journal, where I'm going to discuss the most important news, economic, financial news from the world of the past week. Um, if you don't want to miss any more highlights, don't forget to hit the subscribe button and turn on bell notifications so you never miss one update anymore. Okay, let's not waste any more time. Let's start with the first one, and that is the US economy is to lose billions as foreign tourists stay away. So, of course, we all seen the trouble in the world with the tariffs and what the Orange Man has been saying, um, the way he aggressively pushed his tariffs onto other nations, and it quite upset some people. And this is showing that the U.S. economy is set to lose billions of dollars in revenue in this year from a pullback in foreign tourism and boycotts of American products, adding to a growing list of headwinds, keeping recession risk elevated. So, of course, there's still a risk of a recession, because of all the tariffs and stuff like that. A lot of jobs can get lost, and this article shows that arrivals of non-U.S. citizens to the U.S. by plane dropped almost 10% in March from a year earlier, right? And Goldman Sachs estimates in the worst case scenario, the hit this year from reduced travel and boycotts could total up 0.3% gross domestic product (GDP), which amounts to almost $90 billion. So we already saw before that a lot of people from Canada don't want to go to the US anymore for a holiday, but they prefer their own country instead. And if people are going to boycott the US, of course, it will hurt its economy. And here we can see the US airports are welcoming fewer international tourists. It's down 9.7% from March 2024. Here you can see from Canada, Mexico, Europe, Asia, everything is declining. Asia is a little bit stabilizing. South America declining. Middle East a little bit up. As you can see, most of it's declining. So if this continues, the U.S. economy will suffer more. It's a simple conclusion of that, and we will of course monitor how this will develop. On the other hand, China had a good first quarter. Q1 GDP growth tops expectations. U.S. tariffs shock looms large. So what does this mean? China's GDP grows 5.4% versus last quarter 5.4%, above the 5.1 forecast. So it's above the forecast of analysts who expected only 5.1%. So that's looking good, but the tariffs prompt analysts to slash 2025 GDP growth forecasts. So that's the bad news. So China's first quarter economic growth outstripped expectations, underpinned by solid consumption and industrial output, but analysts fear momentum could shift sharply lower as US tariffs pose the biggest risk to the Asian powerhouse in decades. So for 2025, the economy is expected to grow a subdued 4.5 pace year on year. The Reuters poll showed slowing from last year's 5% pace and falling short of the official target of around 5%. So the Chinese government has an official target of around 5% growth every year, which they want to accomplish. But this year they are gonna probably accomplish a little less than that. For now, it's on 4.5% expected for this year. And this is all to do with the tariffs. We think the tariff shock poses unprecedented challenges to China's export and will set for major adjustment in the domestic economy as well, analysts said. So this can potentially hurt China's economy real bad if they cannot find a solution to this. As we all know, there are now 90 days pause on tariffs. So there's room for negotiations, but if they don't work it out, then China's economy will suffer probably. They will suffer. Then the US. So the US plans to use the tariff negotiations to isolate China. So China is trying to find other trade partners with extremely high tariffs on their country, and with the US trade starting the trade war. So China already reached out to Europe and other nations um, to counter these deficits that will develop if the US continues this trade war. The US plans to use these negotiations to isolate China further. So Trump administration plans to use ongoing tariff negotiations to pressure US trading partners to limit their dealings with China. The idea is to extract commitments from US trading partners to isolate China's economy in exchange for reductions in trade and tariff barriers imposed by the White House. They plan to use negotiations with more than 70 nations, asking them to disallow China to ship goods through their countries, prevent Chinese firms from locating in their territories to avoid tariffs. So, like I said, China is reaching out to other nations, and the US is now basically saying, like, hey, if you want lower tariffs, then you should disallow China to trade in your country or to ship to your country or whatever. So it's basically putting the pressure up to China um, to push China to back to the negotiation table. We'll see if this is going to work. The brain behind this is the Treasury Secretary Scott Bessent, who also is very busy with the negotiation and the 90-day pause on tariffs. But then, of course, China. We stay in China this time. China is slashing back. They are boycotting now American manufacturer Boeing. Um, and what does this mean for the company? So Boeing had reportedly been launched into the center of the US-China trade war, adding to the difficulties already facing America's largest aircraft manufacturer. Beijing has directed its airlines not to take any further deliveries of Boeing aircraft, which a halt also placed on imports of aircraft-related parts from all American companies. Chinese officials are also now requiring airlines to seek approval before accepting delivery of orders that have already been placed. So this is looking bad for the company Boeing, and the move, if confirmed, could spell trouble for the aerospace giant, already battling production delays and financial difficulties following a turbulent 2024, a year that saw its second largest annual net loss of 11.8 billion. Short-term pause or held to deliveries to China could take a toll on Boeing's bottom line. So this could seriously hurt like Chinese companies, I mean US companies. If China slashing back and say, hey, we're not going to buy your products anymore. If China chooses for like Airbus, because you only have two very big aerospace companies in the world, Airbus and Boeing, who are producing like aircrafts and stuff like that. And we already saw that China is like reaching out to Europe. So if China will choose Airbus, then yeah, Boeing and America can seriously suffer from this because China is fighting back. So we will see how this is going to develop. Then Volvo, the European Swedish car maker, is about to cut up to 800 US jobs as Trump's tariffs bite. So Volvo to lay up to 800 workers due to market uncertainty. Plans to lay off as many as 800 workers at three US facilities over the next 3 months due to the market uncertainty and demand concerns in the face of Donald Trump's tariffs, a spokesman said on Friday. So what's happening? Heavy-duty truck orders continue to be negatively affected by market uncertainty about freight rates and demand, possibly regulatory changes and impact of tariffs. We regret having to take this action, but we need to align production with reduced demand for our vehicles. So Volvo is going to cut up to 800 jobs. It's one of the first companies coming forward with a statement, but it will certainly not be the last one. If this uncertainty stays, a lot more companies are going to do that. This is, of course, very bad news for the US and for Trump. As Trump said before, that because of his tariffs, a lot of manufacturers would come back to America, creating even more jobs. That was his promise, but right now they're even cutting jobs. So we'll see what's going to happen here. Then some good news for crypto. Binance advises countries on creating Bitcoin reserves, says its CEO. It's helping several governments establish strategic Bitcoin reserves and develop regulatory frameworks. So, it actively advised several governments on creating national Bitcoin reserves. It's receiving requests from countries and sovereign funds. Of course, the first example was the United States with Trump, who are trying to create a strategic Bitcoin reserve. course, this was not exactly as people expected because US was not gonna buy any crypto or any Bitcoin with their own funds. They just wanna hold the already seized Bitcoin and not sell them. But this is of course very bullish news for the crypto industry. It says Binance is actively involved in discussions with multiple governments regarding establishments of strategic digital asset reserves. They received a number of proposals from government and sovereign funds. Unfortunately, they did not specify the countries, so we don't know exactly who these are. But two of them are named. Pakistan and Kyrgyzstan recently announced collaborations with Binance on crypto regulation. So this is only crypto regulation, no concrete plans for national Bitcoin reserves. But of course, this is bullish news that people are and countries are reaching out to Binance for advice on how to create a Bitcoin reserve. It would be very good for the crypto industry if not the US was the only player, but other countries would follow as well. Okay, and then the last news we're going to look at before we're going to take a look at the charts. Trump approvals rating on the economy drops to lowest of his presidential career, survey finds. So, Donald Trump is registering the worst economic approval numbers of his presidential career amid broad discontent over his handling of tariffs, inflation, and government spending. Survey found that the boost in economic optimism that accompanied Trump's re-election has disappeared, with more Americans now believing the economy will get worse than at any time since 2023, and with a sharp turn toward pessimism about the stock market. So, more about this later. This is potentially good news for us. 44% approving of Trump's handling of the presidency, 51% disapproving, slightly better than final reading when the president left office in 2020. On the economy, however, showed Trump with 43% approval and 55% disapproval. So he was re-elected specifically to improve the economy, and so far people are not liking what they're seeing. 49% of the public believe the economy will get worse over the next year. The most pessimistic overall research result since 2023. And here's something that can be potentially interesting for us. Meanwhile, Americans have turned more negative on stock market than they've been in 2 years. Some 53% say it's a bad time to invest, with just 38% saying it's a good time. The numbers represent a sharp turnaround from the stock market's optimism that greeted the president's election. So, we usually see that when the sentiment's negative, there are really good buy opportunities in the market. And when the sentiment's too positive, the opportunities are not so good as the risk reward ratio. Because usually equities are valued, are trading for lower when there's not much optimism, and they're trading way higher when there's much optimism. So the fact that more and more Americans are turning negative on the stock market shows there are probably some big opportunities that people are not seeing anymore because people are just in a too negative mindset. Um, and the second thing is that it's quite remarkable indeed that when Trump was elected, the whole market was full of optimism, especially crypto. Crypto was going to go to the moon, stock market was going to go to the moon, and now everything has been down for the past few weeks, past month. So it's very interesting to see that it can swing so sharply, the momentum. But I think this the fact that more people turning negative, this is a great opportunity for the stock market, and it proves that where other people are negative and they don't see chance anymore, they're leaving investing. Other people can pick up good companies that are trading for lower. Okay, the last thing I want to do is look at the charts. First S&P 500 and Nasdaq, and then end with crypto. So as we see, the S&P 500 formed a lower high. It probably formed a low here, and we're just struggling to remain above the support level of around 5,258 points. We're currently around 5,282. So we closed above the support, but just barely. The Nasdaq's even worse. We're closing under the support line of 18,376 points. Both S&P 500 and Nasdaq have to break above the last high to continue trading up. So it would look like something like this, go up from a lower high and then like continue. But we're currently not there yet. Then crypto. Let's take a look at Bitcoin. We see Bitcoin is holding up a bit better than S&P 500. Currently trading in a range. As you can see, we're above the mid level, so we're remaining the mid level. That is a good sign. We got some, grabbed some liquidity at the top, we grabbed some liquidity at the bottom. Now we're basically like falling in between. I think if we can keep the mid level, we probably see another try for like the range high, around 80,000 points per dollar. Maybe this extension period of 91,000, 92,000. If we can break this level, we will of course see another swing to 100k. We're going to test the 100k level, and if we can hold the 100k, we will break to 108 or 9, like the previous all-time high, to see if we can keep that. If we break the 109k, we'll see probably a big rally to the 120 level. We are not so far yet, so it's probably best to look at what's going on right now. And right now we're still in the range, so we have to keep this range, keep above the mid level, stay above the mid level, the mid range, and we need to see a breakout at least until this level of 88,000 soon in order for Bitcoin to be a little bit more bullish. But right now it's still looking okay. That's it for this Sunday journal. Please let me know down in the comments below what you think of this. Should I keep this format? Don't forget to like, comment, and subscribe. And I'll catch you guys in the next video.